Hello and welcome to the African Regional Conference 2015. I'm joined now by Donna Oosthuyse, who is the Director of Capital Markets at the Johannesburg Stock Exchange. Donna, welcome.
Thank you.
Now, looking back over the last 12 months or so, the JSE has performed really well. Obviously, it's outperformed many of its regional peers as well. I want to ask you, what really has sort of underpinned that success?
There are many drivers of success of our exchange. I think what's important to recognize is about 40% of the trade on the JSE is conducted by international investors. So we are very much influenced by what's happening in the global economy, what's happening with investor sentiment in the global market, and also what the perception of Africa is more broadly. This year we've seen a lot of activity resulting from views on the uplift in interest rates in the United States. We've seen the impact of quantitative easing in Europe and Japan. And we've also seen a renewed interest in emerging market risk in South Africa. And what I'm told by the investor community and the big trading firms is a lot of that is due to the fact that other emerging markets are under more duress, places like Russia with the situation in the Ukraine and so forth. So last year, in the first quarter of the year, we had 8 billion rand in inflows. This year, in the first quarter of the year, we had 12 billion rand in inflows. And so what we have been told are that the international investors that were relatively underweight South Africa have come more to a neutral position, or perhaps moving to a more overweight position in South Africa. Indeed, we've seen in the first quarter of the year, the ALSI, our all-share index, went up by about 5%. And a lot of that, again, driven by events not just in South Africa, but in the rest of Africa. South Africa is a very deep market, liquid market. The assets of the non-bank financial institutions are 8.5 trillion rand compared to 5 trillion rand in the banks. And there's a very sophisticated ecosystem around our trading environment. So often what we see are investors that want to buy into Africa will buy South African counters, that is, companies that have a large investment in the rest of Africa. A good example of that is MTN. And we saw their share price increase by almost 9% the day after the Nigerian elections, because they get their 60% of their revenues from Nigeria, for example.
I see, okay. Now, on top of this, the JSE has also been working hard to provide access to capital for smaller companies through the alternative exchange. Now, that's been active since 2003, but how has that growth story unfolded over that time?
The Altus exchange has been a very interesting and I think a very good success story for us. It is, we've had just under 100 companies that have listed, and of those companies, we've had just under a third have migrated onto our main board. And that, to me, in fact, that statistic, it positions us relatively well on a global stage compared to other exchanges of the number of companies, or relatively speaking, that list on a junior board that migrate to the main board. So it's been, to that extent, a very good incubator. I think that the one thing that we can also look at in terms of Altex is that it is a board that allows companies to list without having a profit record. So we see companies that are in various stages of development, but including startup companies, come and list on that board. Also, we allow dual listings on Altex. And our first fast-track listing on the JSE was actually a property fund that dual listed on a fast-track basis from AIM in London. So I think there's a lot more that we can look to do with Altex. I think it's very important that an exchange like the JSE maintain a link to the real economy. And we know in South Africa and the rest of Africa, the real driver of job creation is not going to be the real large corporations that are moving more towards automation and technology-driven production. It's going to be small and medium-sized businesses. So it's very important for us to maintain our link to the real economy, to provide a mechanism for small and medium-sized businesses to raise capital, but also for investors to have access to invest in these companies, because often their rates of growth and the appreciation of their stock prices is higher than that of the large companies. Last year, for example, we saw the liquidity on Altex reach almost 20%. So we've also seen a lot of trading activity, or more trading activity, in those shares than we had in the past. I think the next steps on Altex will be for us to look to see how do we build out the ecosystem around it? How do we get more analysts to cover these small stocks? How do we reach other financial institutions to provide debt capacity? How do we on the exchange provide, because we have a debt board, how do we on the exchange create opportunities for listings of debt, not just equity on Altex, and so forth. So I think there's a lot more that we can see, but to me what's important is the fact that it has been a successful incubator in terms of growth, and that there's more that we can be doing to create this link with the real economy and the driver of growth and job creation.
Okay, sure. Now, Donna, lastly, one of the important points under discussion here across this conference is the idea of connectivity between regional exchanges as a means of sort of building the sort of liquidity and depth of regional capital markets. Obviously, one of the key challenges here is executing this and putting this into practice. What are the issues here? What are the roadblocks sort of on the path ahead?
You know, I think to begin with, I think any development that we have in capital markets in Africa is good for all of us, because one of the things that we need to recognize is that for our markets to really integrate, we need scale, and we need some harmonization, and we need accessibility. And I believe that, you know, whereas at the present time, the countries in Africa all want to have their own exchanges, they want their own venues, that should not be a hindrance for issuers and investors to access each other's markets. So for me, step one has got to be for those of us that are in public markets, in the organized exchanges, to find ways to facilitate issuers to issue into each of our markets, either through a fast-track process or through a dual listing mechanism or through exchange-traded funds. We need to facilitate that. We have, as I mentioned earlier, 8.5 trillion rand of assets in the non-bank financial institutions. They're very interested in having exposure to risk in other markets. A lot of them would prefer to do it in their own market because of exchange control or because of ease of execution. There are lots of reasons. So I think that the step one is to allow issuing, therefore allow trading. For that to happen, there needs to be some fungibility of registers, so we need to be looking at that. And I believe that as we start allowing issuers and investors to have exposure to each other's markets, through the market activity itself, we'll see more integration of our exchanges. And I think that is going to be absolutely critical for the development of capital markets and for the investor community and the issuer community to access the pool of capital and potential savings that we have within Africa, that we're not so dependent on flows coming in from the rest of the world.
Okay, well, Donna, thank you for your time today.
Thank you.
Thank you.